You hear the words stock market, and what comes to mind? For a lot of people, it's just this confusing mess of jargon and scary headlines. But what if I told you that understanding just a few key ideas is all that separates the people who win from the huge majority who lose? Well, that's what we're gonna do right now. We're gonna cut through all that noise and give you the solid foundation you need to get started the right way. All right, but first, let's just rip the Band-Aid off. You've probably heard that most people don't do so well in the market. Well, the real numbers are kind of shocking. The data shows that a staggering 97% of retail traders, that's everyday people like you and me, actually lose money. Just let that sink in for a second. 97%. It's a huge number, and it's exactly why so many people are terrified to even dip their toes in. So that's the scary part. But the real question, the only question that matters, is this. How do you get into that tiny 3% club? And that's what we're here to unpack. It's not about some secret formula or just getting lucky. It's all about understanding who the big players are, what game they're playing, and how you can sidestep the traps that catch everyone else.
To get started, you have to know who you're sharing the playground with. See, the market isn't just a bunch of random individuals buying and selling. It's an arena dominated by a few very powerful groups. And figuring out who they are is step one to understanding why prices move the way they do.
And this chart, wow, it tells you pretty much everything you need to know at a glance. Just look at those massive chunks of the pie for FIIs and DIIs. Those are the big institutional investors. Now, look at that tiny little sliver for retail traders. That's us. This one picture makes it crystal clear. The institutions are the whales that make the waves, not the small fish. So let's just break that down a bit more. On one side, you've got the institutional investors. We're talking the huge banks, mutual funds, insurance companies. They're called the smart money, and for good reason. They've got billions of dollars and whole armies of researchers. And on the other side, you've got us, the retail investors, just regular people trading with our own cash from our laptops. Okay, so this right here is maybe the single most important takeaway from this whole thing. If the smart money has all the power to move the market, what is the smartest possible thing a small retail investor can do? It's actually pretty simple. You want to swim with the current, not against it. Trying to fight these giants is one of the fastest tickets to joining that 97% we talked about. All right, so follow the smart money. Sounds easy enough, right? But how? What does that actually look like in practice? Well, there's not just one way to get involved. There are a few different strategies, and you've got to figure out which one fits you, your goals, and honestly, your personality. It basically boils down to these three main approaches. First up is good old-fashioned investing. This is the marathon, not a sprint. We're talking 5, 10 years, or even longer. It's all about fundamental analysis, which is a fancy way of saying you're digging into a company's health to see if it's a good long-term bet. Then you've got swing trading. This is shorter, days, maybe a month. It uses technical analysis, where you're not really looking at the company, but at the stock's price chart, looking for patterns. And finally, there's day trading, the super fast version, buying and selling on the same day, using that same technical analysis for tiny, quick moves. Now, I can hear you thinking it already. This all sounds interesting, but isn't the stock market just super risky? We've all heard the horror stories of people losing their life savings, and that creates a ton of fear. But is the market itself really the villain? I love this quote because it just hits the nail on the head. Think about it. Driving a car isn't automatically dangerous, right? But driving it at night, in the rain, with no headlights on, yeah, that's risky. The stock market is exactly the same. The danger isn't the road itself, it's getting on the road without knowing how to drive. And that's really the bottom line, isn't it? The biggest risk you can take is not being in the market. It's jumping into the market completely unprepared. It's like trying to navigate a maze blindfolded. But if you have a map, if you have knowledge, you can find your way through safely. And that brings us to the other big myth, the one you hear all the time, that the stock market is just one giant casino. So is it really just a big gamble? Well, the answer comes down to one simple, powerful word: control. So let's just put it out there. When you buy a stock, are you just pulling the lever on a slot machine and crossing your fingers? Or is there something more going on? Well, take a look. When you put them side by side, the difference is night and day. Gambling is about pure luck. It takes no skill. But successful trading, that requires a real skill set. And here's the biggest difference: risk. In a casino, once you put your chips down, that's it. It's out of your hands. You either win or you lose the whole thing. But in the market, you have tools to manage your risk and decide exactly how much you're willing to lose. Which brings us to the secret sauce, the one skill that truly separates the pros from the amateurs: risk management. This is the whole game. It's a set of strategies you use to protect yourself, to control your potential losses before they happen. It's the skill that puts you in the driver's seat and takes you out of the casino.
So, to answer our question, can trading be gambling? Oh, absolutely. If you jump into the market with no plan, no rules, and no way to protect yourself, then yes, you might as well be in Vegas. The market isn't the gamble, your approach is.
Okay, so if you're ready to treat this like a skill to be learned, not a lottery ticket, what do you actually need to get going? You might be surprised. The toolkit is actually pretty simple. Here it is, your whole starter pack. And just look at what's number one. It's not money, it's not a fancy computer, it is knowledge. That is your most valuable asset, period. After that, yeah, the tools are easy. A DMAT account, which is just a digital account to hold your shares, a computer or smartphone, and a decent internet connection. But everything else is worthless without step one. And that's really what it all comes down to. We've talked about the players, the strategies, and the real meaning of risk. You now know the basic framework, more than most people do when they start. So the question isn't what's the stock market anymore. The real question is, are you willing to put in the work to become part of that 3%? The journey doesn't start with your wallet, it starts with your brain.